Knowing imbalances and knowing how to spot them, how to trade them, how to use them as targets, and how to potentially see where price can reverse from is crucial to our part of trading. Not only can it stop us from taking more losses, it can also help us get the targets before price reverses. In this video, I'm going to go through a couple examples of how and what an imbalance actually is and why they are so crucial and why you need to know them if you're going to be trading my strategy. I will just say before the video starts that there is a free Discord down below if you'd like to join it. It's not very active at the moment. However, I am active every single day posting my daily analysis. I also do a video analysis, but that's on a whole different website. But on my Discord, I post screenshots of my charts each morning to see what I'm looking at. And if you can match that, then you're doing the right thing. So I will just say that. However, without further ado, let us get into the video and start understanding what imbalances actually are. What is imbalance? Well, as you can see on your screen right here, imbalance is when there are significantly more buy orders than sell orders, or vice versa. Price moves quickly in that direction until it finds enough opposite orders to restore balance. And I'm going to show examples of this. On a price chart, imbalance often appears as a large impulsive candles or a series of candles with little to no pullback. Traders believe price may later return to that imbalance zone to fill in the missing orders, also known as fair value gaps. I do not like to call them fair value gaps because we use them a little bit differently. Fair value gaps, I'll show you a little example of what one is and how our targeting system and our reversal system works a little bit in that sort of way, but not all the same. But without further ado, we're going to get into an example. So if we're looking at here, we can clearly see an imbalance. An influx of sell orders in this case, where price has completely pushed these candles down, no wicks to cover these bodies. For example, let's say a candle opened right here and it wicked all the way up this body and filled it. You would no longer class that as an imbalance because all them orders within that candle has been filled. Therefore, you would no longer class that as an imbalance zone. You would no longer see it as a potential threat to your take profits, and you would no longer use it as a target. So, if we play price along here, let's say we get a tap in. So just to confirm, a price has created a imbalance. So let's play price on. So if we play price along here, let's say we got a tap in, which we did. Now, the strategy differs here because we put our stops below the zone, below the wick, below the bodies, and we would simply target the top of the imbalance. Now, you could say, well, you're targeting the top of what's called an order block, but we're not going to go into that because we don't use order blocks for this time. Let's just stop and let's analyze trading imbalances. So, this is the top of the imbalance, right? Normally, it's going to be the top of an order block. As you can see here, we can see an example of an order block right here. But if we were to use targets, let's say we entered a position when the zone tapped in here, zones below here, we would target the top of the imbalance because this is where price is most likely to reverse. So if we press back on that and we're just going to play price on here, remember, these sell orders, not all the time, but eventually will be filled. So you see all these unfilled orders here, you see the gap, you can expect them to be filled at some point. A lot of the time it can be in the same session. For example, if like we are today in for buys, we can perfectly use this as a target. Simply because the imbalance is right next to us here, we can simply target the top of it. So if we play price along, we can see price comes up, we start to react, and we see, you can clearly see here how we've already started to react. Now we are on the 30-minute. If I jump down to the 5-minute here, we can clearly see the top of the imbalance has been reacted off multiple times. Now this is the same for the 5 minute. If we were to target this, which again is an imbalance, and we've targeted the top of it, then we can see price has tapped into it, and then it fails to break. It fails to break again until we eventually do, and then we can see it almost acts as a support level. Because when we break above it, we then start tapping into, push up, tap into, push up, tap into, push up. And so it's at these levels, we can clearly see price is reacting. Therefore, if you need a target and you can't find one, it's always good to be aware of the top of the imbalances. Price can react, price can reverse. Sometimes price will just blow through it, and that's understandable. However, a lot of the time price will come to these points and simply just have a reaction off it. A lot of the times it may reverse. Some other times, like I say, it will just blow through it. So let's say we're still in US session for the sake of saying it. On the 5 minute, we've got this imbalance and our target has been hit. Let's say we're still in the trade. What other imbalance do we have? Well, this candle has been filled. This candle right here. You can see by these following wicks here, the orders have been filled. So this candle is not really important. But what is important are these two candles above it. So if we draw our rectangle out here and drag it across, we can clearly see that this could also be a potential target. Now, you would target the top of this. Using the strategy, you would target the top. We never target in between and treat it like a fair value gap. We would always target the top of the imbalance. As from experience, that is most likely where price is going to reverse from, or potentially reverse from. Obviously, it's not always going to happen. However, this may be the case. So, if we put a line just on top of here, we're going to delete this rectangle. And we're just going to see if price comes to it. It might not. I have not played price on just yet. But if we play price on, we can see Asia session just absolutely dives. So, no. But you can clearly see on the 5 minute, this would be at least a take profit one or a zone to go break even on. So these zones are always good to mark out. Even if you're not using it as a target, it's always good just to be aware of it, just because we can see here how price can react to it. So let's say for this example, we are going to completely ignore our time session zone indicator. Now, obviously, if you were using the strategy, you wouldn't do this, but to prove how imbalances work and how price reacts off these said imbalances, I thought this would be a good example. So let's say you're looking at the chart and we're seeing exactly this. What imbalance points out to you the most? And basically the only imbalance on our screen that has not been filled yet is simply, if you haven't pointed it out already, this zone right here. So what do? Knowing our strategy, all we would do is make sure we're definitely aware of this level right here. This is the bottom of where the imbalance started. This is where price could potentially reverse from. Therefore, we either use it as a take profit target, we use it as a break even target, or you could just use it as a take profit one and leave some profits running. However, if we play price along here, we can see price goes up, goes down, taps in and immediately reacts. And then price pretty much just absolutely reverses. And it goes to show how strong the bottom of these imbalances are, or the tops of the imbalance if you are going in for buys. So it's always important just to make sure you're aware of when price moves in such a way, either up or down, that you make sure if you are in a position near an area like that, that you are either break even, take profit one, or cross your fingers and hope for the best. But I will recommend just going break even or just using it as a first take profit target if price is near this zone. For example, if London session, like it did here, opened at this zone. Now, in this strategy, I use the different time frame indicators. So for example, US session is white, London session is blue, and Asia session is black. For this strategy, it doesn't matter which session has created the imbalance. If you were trading London session, for example, the blue candles here, you would be aware of the previous US session imbalance low, because price could potentially reverse from it. So you would be aware, and like I say, it would have saved you from getting stopped out. You would have been break even, or you would have even come away from this trade in some profit for the day, which is always going to be a win. So just make sure that you understand the importance of these imbalance levels. Now, if we play price even further along here, we can immediately see price comes back to the top of these zones, reacts. This one doesn't really want to close above it. I'm sure if we break above it, and then again it holds, Asia session holds for multiple candles. Now again, we are on the 30-minute time frame. If I jump to the 5 minutes, it's probably going to be a bit more of a mess, but you can see how they are literally used as support and resistance levels. I wouldn't recommend trading my strategy, because I haven't done it yet, using these for entries. I would never get an entry off an imbalance candle. I would only simply use them as targets. And as you can see, if they were a target, you would be very thankful after watching price play out all day that you either did take profit or move to break even, because you would not want to be caught out in this. So again, if we jump into the chart, we can see if we are trading Asia session, which is the black candle, which again we would never do, but for the sake of the video, where would the imbalance be? Straight away you should be able to spot this is where the target should be if we are going to be trading in Asia session. We need to be aware of this level, because price could potentially reverse off this area. So if we play price along here, it comes down, fills these orders, US session opens, and then we can see price completely, just absolutely reverses from this zone. Yes, we do have a lot of price here that it has also reacted from, but the fact that the bottom of the imbalance has been filled as well is definitely a positive if you were looking for some buys. Again, don't use these as entries, simply use them as, maybe if price opens up too close to them, then you be careful about even getting an entry, because price could reverse from these levels. These are just something to be aware of. Now I can go into some more details, but if you see an example like this and you're in a trade and price is coming to an area of this sort where you've had the imbalance and you see the bottom of this candle here, then you would simply just have a break-even strategy, have a take profit one plan, be like, okay, price is going to come down to this level. Do I ever want to go to break even? Or does it look like a strong level? For example, it's got a lot of backing here from previous price action. Do you just want to simply take your profits at this level? Because the fact it might completely just explode or reverse in your favor, you'd be better taking profits than going break even. Either way is a win, as long as you're avoiding a loss. So just be careful of these levels. Again, if you want more examples, I'm happy to do another video like this, maybe with some better examples. However, this is sort of the basic sort of level you need to understand, just in case you see me targeting a bottom or a top of an imbalance and you're like, well, hang on a minute, that is not really what you teach. Yes, just be aware of it. Again, like I say, it can be used as targets, break even, or even if you're going to take some profits out of your trade, do it at this level. Maybe try let the others run, or in this case you would have taken a bit of a hit. But that's about wraps it up. If you have any questions, feel free to join the Discord and message me privately. I'll be more than happy to give you an answer. So be wary of this, guys. Go back test it, forward test it, and even look at the chart now to this day, whatever day you're looking at it. If you want to load up a chart and you can literally see them right away, whether they've been filled already doesn't really matter, as long as you can familiarize yourself with knowing what they look like, then you are on the right track of understanding how we can use them as targets. Again, I can go into further detail, but for this video, that is about going to wrap it up. Any feedback, good or bad, please do let me know in the comments below. I'm always here to learn and adapt. Like I say, any questions, feel free to shoot them in the Discord, and I will get back to you as soon as I can. Thank you so much for watching this video, and I'll see you in the next one.